Gold buyers are flooding in, pushing prices toward all-time highs. Will gold continue its rally and break through $2,700? Or should we watch out for a potential pullback? Find out the answer in today's As Good As Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good As Gold. Last week, we saw a strong V-shaped reversal in gold prices, with the bullish trend picking up again. Concerns around U.S. jobless claims drove gold higher, but stronger than expected inflation data and easing geopolitical tensions put some pressure on the price. In the short term, traders will be watching U.S. retail sales data and Fed speeches closely, as this could trigger some swings. Meanwhile, the U.S. election and China's economic situation will be the key factors in determining whether gold can hit the $2,700 mark. So in today's video, I'll dive into a technical analysis, break down the drivers, and then share the factors I believe could play a pivotal role in shaping gold's trend. So let's jump right in. Looking back at the gold against US dollar daily chart, gold saw a clear V-shaped reversal last Thursday. Before that, the price had dropped for 6 straight days, breaking below $26.25, which had been holding since the end of September. This increased bearish sentiment, with some speculating that prices could retest the $2,600 level. However, last Thursday, the bulls came roaring back, reclaiming $26.25 and the 5-day EMA, pushing prices higher. So if the bullish momentum holds, I believe $26.75, the upper range of the September consolidation range, will be a key level to test before further upside opens up. And on the flip side, if bears re-enter the market, $26.25 and $2,600 should offer some support. While buying pressure has been picking up, we're still seeing a battle between bulls and bears. On the bullish side, last week's U.S. initial jobless claims came in much higher than expected, and the Fed Governor Waller also highlighted that hurricanes and strikes could shave 100,000 of October payrolls, raising concerns about the U.S. labor market. And since the non-farm payrolls report is actually a key factor for the November rate decision, this distorted data adds uncertainty around the Fed's path for rate cuts. In addition to that, the U.S. debt situation, by the end of the fiscal year in September, the deficit had hit $1.8 trillion. Concerns over U.S. employment and fiscal issues are keeping a lead on huge sellings. While on the bearish side, U.S. CPI for September is hotter than expected, and the market is now pricing in a nearly 90% chance of a 25 basis point rate cut in November, with the likelihood of any more cuts this year getting slimmer. The 2-year U.S. Treasury yields has stabilized around 4%, pushing the dollar index above 103 mark, which raises the opportunity cost of holding gold. Meanwhile, China's CPI continues to cool, and as the world's largest gold consumer, its persistent deflationary pressure doesn't really bode well for gold prices. Geopolitically, with Israel signaling it will target Iran's military rather than nuclear or oil facilities, tensions in the Middle East have eased a bit, reducing demand for safe haven assets. So overall, concerns around the U.S. labor market are giving gold bulls an edge for now, but the downward pressure from the slowing disinflation process and reduced safe haven demand can't really be ignored. Looking ahead this week, U.S. retail sales and a string of Fed speeches will be key to watch. The market expects September retail sales to rise 0.3% month-on-month, and I think if we get a stronger number, say 0.5% or more, paired with more hawkish Fed signals, the gold bulls could feel some heat, with a potential pullback to $26.25. That said, in my view, the real drivers for gold to either challenge $2,700 or drop back to $2,600 will be the U.S. election and China's economic trajectory. On one hand, with Trump's odds of winning on the rise, the Trump trade, marked by long dollar plays, could weigh on gold. But if he does win, his policies might increase US debt by $7.5 trillion by 2035. So in the long term, I think the growing debt burden could support gold prices. On the other hand, China's stimulus measures seem to have somehow underwhelmed the market so far. I believe if the NPC Standard Committee meeting at the end of October lays out more concrete fiscal stimulus and some consumer-boosting measures, giving the market a real shot of confidence, we could see gold making a run at $2,700. So that's pretty much all for today. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming data and speaks might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!